Morning, guys. Happy Monday, and quite an advance here. 5-1 advancing to declining stocks. We got the S&P over 3,600. Russell's essentially at a new high. Transport's essentially at a new high. Let's not quibble about a few points here. And you can see that big rotation that we've been talking about all last week still happening again today. Take a look at the sectors here. And the story is pretty simple. Three major moves here. So into value like banks and energy, out of growth like technology, into cyclicals like industrial stocks, which are outperforming, and out of defensive like consumer staples, and broadly into small caps over big caps. Those are the three big momentum trades that we've been seeing ever since really the vaccine came out. You look at things like the REITs here. Simon Property Group, my heavens. I mean, Simon Property Group was $60 6 trading sessions ago, 7 trading sessions ago. Look at this. It's $80. That's 30% move in some of these big REITs here. Same with the travel stocks. There's a lot of 30% movers in the last 6 or 7 trading sessions. So Carnival Cruise Lines was $12 or $13, 6 or 7 trading sessions ago. Look, it's almost 18 now. It's a 30% move in 6 or 7 days. Same with the energy stocks. I talked last week about the refiners, which are acting like all of a sudden the whole country is going to go on a holiday in the first and second quarter of next year. And that may well be the case. Holly Frontier was $17 6 or 7 trading sessions. So that's another 30% move here. It's $23 right now. The opposite is happening, of course, from work from home. Etsy is one of those poster childs for work from home on the upside and the downside. It was 144, I guess, 6 or 7 trading sessions ago. Now look at it, 123, 124, somewhere around there. So you can see the declines there, 14, 15%, about even for Facebook and Netflix. Clorox down last week, about 5%. Down again today. So let's remind ourselves about those buckets we talked about months ago and what moves the markets, because a lot of positive stuff. The reopening story is the one negative out of 4 or 5 of them that's out there. Treatment and vaccine, a big positive. Divided government, that's a new one on the bucket list, and that's generally obviously a positive for the markets here. How about low, ultra low interest rates? That's another positive that we've got. And then fiscal stimulus, well, it's a possibility. There may be a lame duck stimulus package coming. We don't know or not, but let's say that's a possible. So 4 out of 5 are generally positive. In terms of what's driving the stock market, and remember, ultimately earnings are what matter. Earnings are growing, particularly in the first and second quarter next year, modestly for the fourth quarter. Dividends, let's just call that recovering. I wouldn't say they're rebounding, but they're recovering. Liquidity, is there money to buy stocks out there? That's a big factor. That's high, thanks to the Federal Reserve. You can thank them for that. Here's the one negative in this group. Valuation is very much on the high side. We're trading at 21.5 times 2021 earnings. That's high. If you look at the S&P 500, the market is basically anticipating in 2021 we go back to record highs in earnings. So at 2019, the S&P earned $163. We're going to go down to $137 this year. And in 2021, hey, it's back to 2019. In fact, we're going to hit record highs. The market's anticipating that, new highs in earnings. The problem is, even at 168, that's pricey. That's 21 and a half times forward earnings at the prices we've got right now. So the market's kind of saying, it thinks the earnings are going to get even better than that. Could we do 170, 175, 180? Who knows? We have been doing that in the third quarter. The numbers kept going up. The market is definitely anticipating that the earnings are going to be a little better than some people are anticipating now. We'll see if that happens. But right now, I can tell you, in terms of the earnings, there is definitely anticipation of a big party beginning in the second quarter of 2021, because that's when the earnings really start to move to the upside. Carl, back to you.
Shepard Smith here. Thanks for watching CNBC on YouTube.